What's up, everyone? Welcome to this week's video. Hope everyone's been safe and healthy over this past very volatile week in the markets, and hope you guys all have the supplies you need for the next couple of weeks. It looks like that we're going to be quarantined. We'll jump through quickly the market performance of last week, and then I'll try to guide everyone through the next few weeks and what we can expect. So we have the Dow Jones dropping 10.4%, going from almost 26,000 to just over 23,000. The S&P 500 dropped 8.8%, going from almost 3,000 to just over 2,700. You'll see that the S&P slightly outperformed the Dow. It's because Boeing is a huge Dow component. And we know that in addition to the 7337 issues, Boeing is also going to experience most likely much lower orders due to the fact that most of the airlines have been grounding planes, meaning they won't need to buy any new planes anytime soon. And finally, the Nasdaq down 8.2%, going from 8,600, we'll call it, to about 7,900. And I guess this is the one bright spot. It seems like the Nasdaq may be bottoming as it's outperforming the other two indices right now. And these guys are your growth leaders going forward. So the big news of the week, and obviously the big question ahead, is what happened with the markets and where are we going to go from here? If you recall, last week I mentioned that I didn't think we bottomed on Friday because that W was just too short term of a W, and there was also a low from December of 2018 that we may need to test. This week we came very close to that level, especially in the futures. The SPY ETF, which tracks the S&P, came within just a few points of that 2350 December 2018 low. So here I have marked out a few levels that we'll want to keep an eye on going forward this week and probably in the next couple of months. The first level that the S&P dove through was the February 2018 low of 2550. This number, it could be a bottom for the present W that we could be forming in the near future, or it could be a completely irrelevant number as we did slice through it on the downside and we popped right back through it on the upside. The next level to look at is going to be 2828. This is the Fibonacci 38.2 retracement level. I have the link to the Investopedia page, which tells you a little bit about Fibonacci retracement levels and how they work. But we're going to want to look at this 2828 level coming up. As you can see, that's where we bottomed out in late July. And if I zoom in a little bit, it's potentially the next place for our S&P, which is currently at 2711 to go. Now, should we get through that, we'll be looking at the 50% retracement level, which is 2936. And should we get through that, which I don't think we will do without massive volatility both up and downwards, is going to be 3044. And once we get through that, it looks like we could be on our ways to recovering fully from this entire coronavirus scare. However, like I just said, I'm expecting a lot of volatility, and these are the levels where I would try to redeploy some hedges, such as shorts on the SPY, some put options, things like that, and maybe even target a few stocks where they seem just really hard bounces. They're still overvalued. Netflix and Chipotle come to mind, as well as Tesla, things like that, where you want to just short as a hedge even if you're not completely pessimistic on the stock itself. I would like to point out that 2350 may still be in the cards in the near future. If we can get a sustained bounce for a couple of weeks over the current low, then it can perhaps be the second half of our W, but maybe we haven't even formed the first bottom corner of the W yet, and that could still be in the cards. So what can we buy right now? One of the stocks I'm taking a huge look at is Microsoft. As you can see, we bottomed out around 135 last week, and that's a level where the stock kind of churned around and kind of formed a base at early last year. And Microsoft is a company which I think we can all agree is not going away anytime soon. And I like it a lot more than Slack per se, which is trading up based on the fact that everyone's working from home and people for some reason think that people are just going to go to Slack. Microsoft has positive cash flow and an actual valuation, and need I remind you, they do own Skype, Microsoft Office, Outlook, Link, and LinkedIn. And if you think about it, we're going to be using the first few to work from home, and once the hiring starts again, people are going to be jumping on LinkedIn. So I never really understood the whole fad of everyone thinking Slack is going to benefit greatly from this coronavirus outbreak more than Microsoft. Microsoft is more established. They have the same products, wider use. And if you recall, the market thought that Snapchat was going to take over Facebook for a time a couple years ago, and look how that's played out. I also think that this list that was made in 2019 is a good place to start. These companies that have a whole lot of money coming from government contracts. We know that a lot of people may be out of work needing unemployment benefits right now, but we know that the government has plenty of money. They're willing to borrow more money despite running, a negative balance, and that they're going to keep funding these government contracts. So, like the title suggests, Boeing is included in this list, but it's got some issues on its own, and some of these companies on this list I would not recommend. GE is a very high risk name if you're going to invest in it now. But if you do a little bit of research on some of these names, especially the healthcare names, I think that it's definitely this list will give you some ideas on where you can go and what to invest. If you look at a few charts, we're near some bottoms that have held well historically. So do a little bit of chart work, do a little bit of fundamental analysis, and I think you'll see a bunch of these companies on this list are going to be solid buys because they don't rely on the U.S. consumer. They rely on the government, which we know has money. And so we'll conclude this video with a bit of, I guess this could be funny if you have toilet paper and hand sanitizer at home. It could be tragic if you don't, but as you can see here, a UK arcade owner replaced some of the prizes in the claw game with toilet paper and hand sanitizers. Now, we all know the mad dash that's been going for these products, and I hope that everyone has enough to get through these quarantines or self-quarantines that the government has imposed. But, I thought it was kind of interesting, and if you really didn't have any, I guess it's worth the gamble to try to grab some, $1 at a time. So hope everyone enjoyed this video. Hope I can bring some peace to your worries about the markets, where it might go. These are obviously my best guesses on what traders are looking at when there's no way to fundamentally value the market. Technicals, aka chart work, is where we have to go. And again, the big thing is you just have to realize that we will bounce back from this. The economy always bounces back. It may take a couple years. Your investments may take a few years before you break even again, but you will break even. And selling right now is absolutely not the answer, and a panic is never the answer. So thanks everyone for tuning in. Again, hope you stay healthy, stay calm, and we'll see you next week.